Hello, I'm Sam Stovall, Chief Equity Strategist of S&P Capital IQ, filling in for Stephen Bigger, here to discuss the focus stock of the week. With me today is Ian Gordon, S&P Capital IQ Equity Analyst, and we will discuss Target. Now, besides the fact that Target's been up 22% in the last year, why do you like Target?
I'm glad you asked that. First to start, Target's one of the largest US-based retailers with nearly 1,800 stores under the Target and Super Target brand. They offer an assortment of merchandise in categories like apparel, electronics, home goods, grocery, household products. And there's a couple of reasons why we have a strong buy recommendation on shares of Target. First, we see signs of an improving fundamental backdrop for the U.S. consumer, and we think Target will benefit. And to the extent that this is being led by housing, we see Target as an inexpensive derivative play on the housing market. And we expect, for example, their home furnishings business to see an acceleration in sales growth over the course of the next year or so, and that's actually one of the more profitable businesses for them. The second reason is that we think early consumer reaction to stores that they just started opening in Canada was very positive and bodes well for the longer term performance of their Canadian business. And we expect that that business will go from generating losses this year to profits next year, and that will drive a big acceleration in EPS growth. And lastly, Target just sold their credit card business, and that makes them a pure play retailer now. And so we think that there were investors who may have in the past been more hesitant to invest in Target because they didn't like the risk profile of the credit card business, are more likely to get involved now. And we think that over time the valuation multiple can expand.
Well, tell me a little bit more about these store openings in Canada. When did that happen?
Sure. So first, Target actually entered the Canadian market in an unusual way. They acquired about 135 leases from Zellers, which was a troubled Canadian retailer. They closed those stores, renovated them, and then began opening them just this past March. Normally, developing real estate is very difficult in Canada, but this transaction will allow them to open a significant number of stores, just in the first year, and we think they'll get to a market share level that it took them decades to get to in the U.S. So now they have 48 stores, with about half of those just opened in the last couple of weeks. And the results from the stores that were open in the first quarter were actually pretty good. Sales productivity was close to the level of the U.S. Gross margins were significantly higher than the U.S., and we think that bodes well for the longer-term performance of the stores.
Okay. Tell me a little bit about the earnings projections for Target.
Yeah, we have a 3-year compound annual growth rate expectation for Target EPS of 14%, but I'd characterize the trajectory of that growth as a little bit lumpy. So for this year, fiscal 14, we're looking for a 3% increase, and we see this year as a bit of a transition year due to the Canadian startup costs as well as the impact of the sale of the credit card business. We're looking for a strong acceleration in EPS growth of about 25% for next year, and that's a result of Canada going from generating losses to generating earnings. And then we think EPS growth will settle in the low teens range. And in the meantime, underlying all of this is about 10 to 11% growth in the U.S. retail business.
Okay. And what kind of price appreciation do you expect in the coming year? By that I mean, what's your target price and how do you arrive at that?
Sure. We have an $81 target price. That gives about 20% total return potential, including the 2% dividend yield. We use a couple of methodologies to get there, including comparable company price to earnings multiple analysis, and we also look at Target's historical PE relative to the S&P 500. Each of those gives a slightly different result, but the average is $81. And I'll just note that that target price represents about a 14.5 multiple on our fiscal 2015 EPS of $5.62, and that's about in line with where the S&P 500 is trading.
Wonderful. Thank you, Ian. Thank you, everybody, for tuning in to the Focus Stock of the Week, where you just heard about Target.